Hi there, welcome to Kneppy Invest. Inspired by copper, where we saw one of the largest increases in that commodity ever. I think the last time we saw copper up 7% was back in 2011, and previous to that was 1999. So, a pretty good day for copper. Not only copper, we also saw a pretty good day for gold, zinc, aluminium, and the reason these commodity prices went up was because of rumors that China is going to relax their COVID policy. So if you do own any companies that are either producing or exploring those commodities, expect a pretty good day on Monday. So inspired by copper, I thought I'd do a technical update, and I'll be featuring copper, looking at their chart to see if it's possibly breaking out, and maybe because it has been in a downtrend, maybe it is now moving into an uptrend because of this one really good day. And I'll also be looking at about something like 7 or 8 ASX companies. All the companies I'll be featuring in today's video are in uptrends and at least a 6-month high. So even though the overall market is down, there are some companies out there whose share price is going up. And those companies I'll be featuring in today's video include Air New Zealand and Tyro. I think I featured both of those companies recently. Now, for full disclosure purposes, I have taken a short to medium term position in both of those companies simply because of the chart. I don't expect to own those companies for the long term. Also, Tyro has had quite a few rumors of takeover bids for that company. And if one of those does come to fruition, I would expect the share price of that company to soar higher. Another company I'll be looking at is Woodside, WH sold Pattinson, Premium Investments, Smartpay, and Duratec. Now, I don't think I've featured Smartpay and Duratec in one of my videos before, and so at least something new. And both of the charts for those two companies do look interesting right now. Before we have a look at those 7 ASX companies, let's have a look at copper. And this is the daily copper chart going back to November last year. You notice between November and about April of this year, copper prices were slowly grinding higher. In fact, they did reach a high of about $5 a pound back in, looks like that is in March. But copper prices have been under pressure, particularly between around about April and July, August of this year. We did see it fall from that $5 high all the way down to about $3.20 a pound. So why did we see copper prices fall during that period and really go sideways since then? And it's all to do with the relationship between copper and the state of the economy. So there is a term, Dr. Copper, it's just market lingo for the base metal that is reputed to have a PhD in economics because of its ability to predict turning points in the global economy. Now, copper widespread applications in most sectors of the economy, say from homes and factories to electronics and power generation and transmission. Demand for copper is often viewed as a reliable leading indicator of economic health. And I think that fear of recession, so that means less demand for copper, led to the decrease in copper prices. However, on the 4th of November, copper prices actually rose 7.57%, according to TradingView. Now, I went back through history to find a day where copper prices increased 7.57%, and I could not find a single day. I did find 2 days, one in 2011, another one in 1999, where copper prices did rise by more than 7% in a single day, but not one day that exceeded what we saw on November 4. And the whole reason we saw a significant rise in copper prices on fairly large volume as well, in fact, the largest volume we have seen in at least a year, was because of those rumors of China relaxing their COVID policy. So obviously, if China relaxes their COVID policies, that would be bullish for the global economy. Hence why not only did copper prices rise, but we also saw significant rises in zinc, aluminium, even gold prices rose about 3.5 to 4%. Now, to two companies, I did take small positions, short to medium term positions in, just because the share price of these companies do look fairly positive right now, and there is some positive sentiment behind both of those companies. Now, I would not consider Air New Zealand to be a high quality company. In fact, I would say this is a low quality company. And for low quality companies, I'm only interested in holding these companies if the share price is moving up and is in a uptrend. And right now, I think Air New Zealand, with some positive sentiment behind the company, with some tailwinds, and I'm not sure how long those tailwinds will last. More than likely, they won't last fairly long. The share price of this company is moving higher. And on Friday, the 4th of November, the share price finished at 75 cents. The last time we saw the share price this high was way back in May. So right now, Air New Zealand is right on a 6-month high, and the share price is moving up. So fairly bullish right now about the short to medium term future for Air New Zealand. And if I had to compare Air New Zealand to Qantas, I would choose Air New Zealand simply because I do think the value of Air New Zealand is a little bit behind Qantas at this point in time. And I wouldn't actually consider Qantas to be a higher quality company. In fact, I would almost say Air New Zealand might be a higher quality company than Qantas. So that's the main reason I've taken a short-term position in this company. And whenever I see a little bit of pressure, downward pressure on the share price, that is when I will sell out and hopefully take some profits. And likewise for Tyro, I wouldn't necessarily call this company a high-quality company. I don't even think they're profitable yet. And I don't think this company has a significant competitive advantage over their competitors. And they have quite a few competitors, including Block, which used to be called Square. And the only reason I have taken a position in this company is just a positive sentiment we have seen in the share price over the past 3 to 4 months. In fact, the share price has risen from about 63 cents to a current share price of around about $1.60. And the share price is now in an uptrend with higher highs and higher lows. And the last time the share price was around $1.60 was actually back in April. So we are at a 6-month high for this company. We've also heard either some rumors of takeovers or similar stuff like that, and that has helped in the increasing share price of this company. So hopefully, as a short to medium term shareholder of this company, one of those potential takeovers will come to fruition, and the takeover bid will have a significant higher share price than attached to it than we are seeing right now. And that's simply because I don't expect to own this company for too long of a period, because I'm only going to ride this positive sentiment. And as soon as the positive sentiment starts to fade away, that's when I'll sell completely out of this company. Next company I will look at is Woodside, and a lot of positive momentum, a lot of tailwinds behind this company. And even though I am not a shareholder of Woodside, I did take a position in this company back in 2020 when oil prices fell to the historic lows, because that, in my opinion, that is the time to take position in these sort of companies when the underlying commodity is at all-time lows, and more than likely we'll never see those lows again. Well, I shouldn't say more than likely. There's always a chance. Anyway, this is the yearly chart, the 1-year daily chart for Woodside. And back in November, December last year, the share price of this company was $21. Now the share price has moved through 38 on the 4th of November. So the share price of Woodside has nearly doubled in the past year. And that just shows you the positive sentiment behind this company. Not only that, at the end of trading on the 4th of November, the share price was at least a 1-year high. More than likely, it's probably about a 2, 3, even longer than that high for the company's share price. And in fact, this is the largest company on the ASX with the share price at least a 1-year high. So another way to look at it is this is probably the best performing large cap company on the ASX, although some of those coal companies would probably want to argue with me in saying that. So that's one of the reasons why it would have been beneficial to be owning this company over the past year, because it's really bucked the trend. It's been one of those companies that's bucked the overall trend in the market. Instead of going down, share price of Woodside has been going up. Next company I want to talk about is a company I know very little about, and that is Duratec. Now, even though I know very little about this company, when I look at the chart, I do see some bullish signs for this company because when you look at the weekly or the daily chart here, going back to September last year, the share price was in a downtrend between September and about June, July of this year. And then we did see the sentiment and the share price move into a positive state. So the share price moved into an uptrend because we did see a higher high and a higher low. And in fact, on the 4th of November, the share price closed at about 48 cents. And that is a one-year high for this company's share price. So I went to the company's website just to see what this company actually does. And they specialize in the protection and remediation of steel and concrete structures. And they deliver the best solution to extend the life of your assets. Then I went to their full year or financial year 22 results just to see what sort of numbers this company has. And with a market cap of about 120 to 140 million, something fairly low, so not too high, this company has revenue of 310 million, up from 236 million from the previous financial year, EBITDA of 19.3 million, a profit of 7.8 million, dividend of 2 cents. So this is a dividend paying company. Earnings per share 3.2 cents. So 3.2 cents, share price is 48 cents. So yeah, the earnings per share for this company is around 15. Cash of $58. They don't mention anything about debt here. Pipeline of work, order book 458 million, tenders 701 million, and a strong pipeline of $1.72 billion. So interesting company here with the share price in an uptrend. And in fact, I might do a video on this company in the future simply because the share price is moving up. So there must be something to like about this company. Next company I'll look at is Smartpay. And just like Duratec, I know very little about this company. So again, I had a quick look at their website, and having a look at their website, this seems fairly similar to Tyro because on their main page, website page, they say here, get FPOS payments your way. Discover why 30,000 merchants choose Smartpay for FPOS. And the company also released a trading update on the 18th of October, and that coincides with a breakout in Smartpay's share price. So no doubt that trading update was quite positive, and that's why the share price has been moving up over the past 3 weeks. Since that trading update, share price has moved from about 63 cents to 77.5 or half cents. And the share price now is at a 9-month high, and the share price has moved into an uptrend. So I'm going to have a closer look at this company, have a look at this trading update. Why has the market reacted positively to this company? Also have a look at their financial year 22 results. So those results were released. If I have a look here, if they've released them at all. Financial year 22 results were released in May. So we will be seeing half-year results released in the next few weeks. So they will be released in November. And I think the reason behind that is because Smartpay is a New Zealand-based company. So time to get excited about another company I know very little about. Now, I might not know much about Smartpay and Duratec, but I do know a little bit more about Premier Investments. In fact, I have been a shareholder of this company on and off over the past 6 or 7 years. And I am not a shareholder right now of this company, but I am looking to taking a position because I am a fan of a couple of their brands. So Premier Investments owns Smiggle, Peter Alexander, and a few other brands that I don't really care about. I really care about Smiggle and Peter Alexander, particularly Smiggle, because in my opinion, that company or that brand has a moat. Just the name, that brand Smiggle, probably creates lots of joy. That's the name, Smiggle, creates lots of joy in many children. So I've never been into a Smiggle store. I have no reason to go into a Smiggle store because I am not the market for that brand, but it is a highly successful brand for Premier Investments, and I still think that brand has a lot to grow from here. Another reason I am thinking about taking a position in Premier Investments again is because the share price has significantly fallen from 1 year ago. So back in November last year, the share price did reach a high of about $32, $33. It pulled back all the way to less than $20 in June. The share price has moved into an uptrend. it has been gradually climbing up, and the release of their financial year 22 results on the 29th of September did not hurt. The market did react quite positively to those results, and the share price has kept on climbing since then. And even though the share price has dropped in the last 2 trading days, the last time we have seen a share price higher than $25 was back in April, May of this year. So the share price of Premium Investments is now at a 6-month high, and for me, that is important moving forward for this company. Last company I want to look at is WH Soul Pattinson, and just like Premium Investments, this company released their financial year 22 results in September. In fact, on the 21st of September, and it looks like, based on this chart, the market did react quite positively to those results. In fact, I would call the release of the results a catalyst for the share price of this company moving into an uptrend and a return to some positive sentiment, driving the share price of this company higher. Because if we go back a year, the share price of this company was moving in a downtrend, a well-defined downtrend, in fact, and that downtrend came to a bottom back in June of this year, reaching a low of $22.50. But the share price, just like Premium Investments, has been grinding slowly higher ever since then. And currently, share price is hovering around about $28. And the last time we saw the share price, $28, was back in April of this year. So the share price of this company is now at least a 6-month high. So a fairly similar chart than what we saw with Premium Investments. And another, in my opinion, another high quality company. So that's another reason why I'm taking a close look at this company, just like Premium Investments. That's all I have for this technical update on the 6th of November 2022, focusing first on copper, and a fairly big day for copper. So I do expect a few of my companies that I do own in my portfolio to be up more than 10% on Monday, because I do own a few copper plays and also own a few gold plays, and I expect those gold companies to see a fairly significant rise in their share price as well. So looks like a fairly good day for me on the Monday. The American markets were up over 1% as well. So I think there is a chance we might see the Australian markets open higher as well, particularly if those rumours of relaxing in China's COVID policies to be the truth. I'm not sure right now. I haven't really delved deeper or haven't delved deeply into looking into the veracity of those rumours just yet. So if you have any questions about any companies I've featured in this company, if you have questions, thoughts about copper, I would love to hear them. So leave those in the comments section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.